my computer this morning. I think she freaking closed all my pics out. Ashley. Hi, good morning, everyone. Sorry for the late start here. Opened my computer up. I think my daughter accidentally closed out all my pics. Okay, let's get started. Okay, S&P obviously had a hard fade in yesterday's session. We really just pulled back pretty much the entire day after the open, and what was a pretty controlled down move, and not too heavy a volume, but we've definitely been seeing higher volume in the down days than we've seen in the up days in the last 2 or 3 weeks. So I think that's really important to take note of. One thing that is really interesting is how yesterday we finally started to see things start to move a little bit more continuity. Most asset classes kind of falling together, which is we had seen such a divergence for such a long time now. If you look at Asia, you can see that we pretty much read across the board. We had a couple currencies, with India and Indonesia, making new lows, all-time lows there. I think that's really important. You know, we've also seen the rand that's totally blown out here. We've got a real heavy pressure on emerging markets the last day or two, and I think this is going to be the start of what I think some people had been fearing in the market, and that we've had one of the biggest years of divergence between the bond market and equity markets ever in the U.S. In fact, I think going back almost 30 years. So I think that's really, really important. We need to take cognizance of that, and we need to realize how serious that is, the divergence between correlations. I mean, the fact that we had commodities and precious metals racing over the past 3 or 4 sessions, while at the same time the 10-year U.S. Treasury also is racing, is just absolutely unprecedented, and really throws, I think, some really worrying signs into what's going on in financial markets in the moment. So I think right now it's time to really be careful, and you know, try to get light if you're long at the moment, and just kind of figure out what's going to happen next. Okay, we had a slate of earnings. Today we had Glencore Xstrata that was out this morning. Net income number was better than expected. We expected at 1.87 billion, came in at 204. We had Super Group out this morning, which is Super Group SPG, yeah, Super Group out this morning, better than expected. Earnings per share of 221, expected at 194. Revenue at 11.7 versus 11.2. We have bulletins that just reported a second ago. Numbers looking a little bit light there. I'm not sure where the earnings per share number was. The divvy missed by 1 U.S. cent. Earnings per share number also, revenue number also missed by about $1 billion. It looks like the net income number looks light. It was expected at 12.7, came in at 11.8. And some of the comments I made is 2.6 billion investment in Janssen Potash. Investment will be spread over a number of years, and then the second half is going to be affected by lower than expected emerging market economic growth. So I think the one thing that the market's really been focusing on has been that potash investment, and I think that investment has been quite a bit bigger than that over the past, and people just think that it's not going to produce any results. So I just don't look like great numbers out of bulletins, and with Glencore Xstrata beating, it might be a bit disappointing to the market today. We've also got ShopRite that's supposed to come out pretty much at the open. Headline earnings per share expected to be at 681. Revenue expectations were expected previously before the trading statement at 94.18, but since the trading statement they guided at 92.7, so that's the number that we're going to look at. Divvy per share expected at 228. So get ready for that when it comes out at 9 today. All right, very little in terms of market data out today. We had the Japanese All Industry Activity Index that was slightly better than expected. We had German PPI, which was a little tamer than expected. And we've got Chicago Fed National Activity Index later today in the States. All right, let's jump into the maps. this might not have such a good flow because I've just had to redo this real quickly, but just have a look here. One of the things that I wanted to touch on this morning is just the emerging markets, how that they've been really under pressure the last few sessions, with the currencies also just getting annihilated. I mean, you've really seen the currencies across the board just really get hammered hard. I would just take this from the lowest close really on the yearly chart. The U.S. dollars are at 10.24. Obviously, we saw some moves intraday up to 10.30 odd, but we're coming up on what I think is a really significant level. Call it 10.23, 10.24, which we're basically at right now. This is going to be interesting to watch today. If we blow out below this, things could get wild here. I really think that the big focus and what we have to be paying attention to right now is going to be on our local bond market and how that's influencing the rand, and how that's going to end up moving our equity market. It's going to be really difficult to sell paper here. If bond yields aren't attractive, it's also going to be difficult if currency is blowing out. So this is going to be something that's going to be, I think, going to become a big story right now. What's going on in global equity markets, specifically some of these emerging markets. I think this could be a very dangerous time in that space. Let's look at ARI real quick. I want to show this. We'll show it first on the 30-day chart. We looked like yesterday like we could break out into a little bit of a continuation pattern. We sort of failed there at about a triple top. Or even a quadruple top. You can see there we failed, and we made a bit of a reversal below here. But what I think is important to watch is just to see if we get any follow through to the downside today. I think if we take out the recent highs, which are around 175.60, then this thing probably can move significantly lower. This might actually be a nice little risk reward short, and the reason why I'd say that is because if you look here from the top end of its range up here near 208, 209, you can really see we're right at fib retracement levels. Yesterday was where we failed, again at 61.8% retracement. So I think potentially a bit of a short here with a stop above the recent highs, which were there at 183, might not be a little bad idea here on ARI. All right, let's have a look at Woolies here. Showed on a 1 year. What I wanted to show here is this thing's actually it's made a nice little consolidation here in Woolies. But if you take this from the close, we really dropped below this a couple days ago, and the last 2 days haven't really been able to regain it. Call it $64. I know we closed at $64.02, but we're still really beneath where this little channel had been, and it looks like it potentially could start to break down a little bit. I know that we've got numbers coming out of Woolies, I think on Thursday, next Thursday. Sorry, we've got ShopRite numbers out today. Retail sector. What I think is important is as well as with our rising rates here locally, it's really just, you can see already from the retail sector, you've seen pressure on it. This market's kind of been front running that for a while. You can see what some of the other interest rate sensitive stocks have been doing. We're going to get into one of those in just a second, and really dangerous place if rates really start to get out of control here in the near term. So I think it's something that we've got to pay attention to going forward, and potentially could just underperform the market in general. If we look at Growth Point here, you can see as well, there's another stock that's really been kind of calling out this move in interest rates. This market's been front running this rise in interest rates the whole way, and really yesterday we just broke out beneath the bear flag there. I'll just zoom in so we can see it a little bit better. Just broke below that bear flag yesterday. Probably got a quick move to the lows at around 23.50 in the cards, and if we take out lows there, then I think you really this really could get heavy in the near term. Mr. Price, another retailer here, they don't have the credit side, but which should be very affected by interest rates. Really right at support here. I think this thing drops support. This could be one of the ones that's held up that could have some room left to be sold in, and I know the numbers have been better there because they don't have the credit side of the business. But remember, it costs them a hell of a lot of money as interest rates go up to hold inventory, etc. So just pay attention to all of these stocks in the next couple of days. These could be really the ones to watch. Now have a look at Barlow as well. Barlow, if you look here, is really kind of making a bit of a bear flag from the sell-off that we saw here. We were a little bit of a bounce up, and then now we're kind of starting to flag into a downward move. Obviously, if it gets above 88, you'd have to probably stop yourself out, but this thing should have been running with the miners, and it hasn't. And I think that's quite bearish, the fact that it hasn't been able to get up along with the mining sector over the past couple of sessions. This could be a great little sell if we fade below this little flag pattern in Barlow over the next couple of sessions. All right, and the last one I'm going to show is Standard & Chartered on the LSE. Really broke below a bit of a upward sloping wedge pattern here, and I think that we've got more. Quite a bit of room to the downside. I mean, the height of this channel really is about a pound, maybe a pound 20 even, and I would say that's probably what we've got from the breakout point, breakdown point, which we'll call that at 540. So I think we could easily trade down to about 1420, which would put us close to the previous lows of the year on Standard & Chartered. And that's it for today, guys. Thanks a lot.